Ladies and gentlemen, it is happening. We have just got more news about huge layoffs that are coming and how this recession, which I've been talking about, is going to turn into a depression, has begun. There's been leaked reports that Amazon is set to announce 10,000 employees being laid off this week as the economy weakens and as the interest rates on these corporate balance sheets continue to skyrocket right when consumers are spending less and their revenue is going down. And I'm also going to go over later in the video why you need to prepare right now for your job maybe potentially being the next one to go, because things are going to be very, very tough coming this winter. So everyone, let's not waste any time. Let's get straight into the news, the facts, and the data. Okay, look at this everyone. Amazon reportedly plans to lay off about 10,000 employees starting this week. So that's right, everyone. One of the biggest employers in the world is announcing layoffs. And this is going to have huge implications for the job market. And it may mean the Federal Reserve will start to slow its rate increases, I think, early next year. But before we get into this report, you need to understand it's not just Amazon announcing layoffs. We're seeing the tech sector, they're announcing huge job cuts like Facebook and Twitter. We're seeing mortgage companies, they're announcing huge layoffs. The real estate sector is announcing huge layoffs. The auto sector and the last one to fall will be the retail sector. So everyone, these layoffs are about to get more and more broad across the whole economy. Because here's other major US companies that have made job cuts so far, from Meta to Twitter. So look at this, Coinbase, about 1,000 employees plus another 60 people will be laid off, because we all know how bad the crypto crash is getting right now and is about to get much, much worse. I expect they're going to be announcing more job cuts soon. Redfin and its real estate firm is about to lay off 13% of its staff. We've already gone over in previous videos about how Meta is about to lay off 11,000 employees, and there may be even more job cuts coming. Look at this, Salesforce is going to cut as many as 2,500 employees. The Gap, they're about to lay off 500 employees. Look at this, Snap, 20% of its employees are now getting laid off. So Snap is going to get rid of 6,400 employees. That's Snapchat for those that don't know. Wayfair, 870 employees. Robinhood, now also I'm very, very worried about Robinhood going under because they were bailed out by FTX. So, I think Robinhood is in big, big trouble. They're going to be laying off 1,000 people in 2022. Look at this, Peloton, this was a big fad, I think. They're going to be laying off 4,600 employees. Shopify, 1,000 workers. Even 7-Eleven, you think they'd be a bit more resilient. They're laying off 880 workers. Like I said earlier, Tesla, they're going to be laying off about 200 employees. And Rivian, the electric car maker, is going to be laying off 6% of its workforce. Another real estate firm getting hit hard, and I think this is early signs that the housing market is going to be crashing people. Remax lays off 17% of its workforce. Even the banks are starting to get hit with all their huge losses they've been suffering. JP Morgan is going to announce over 1,000 job cuts, and it's mainly going to be employees in the mortgage and refinance sector. Netflix, we've all heard about how many people are not watching Netflix anymore. They're going to be cutting 500 jobs. Carvana, 2,500 employees. And we're seeing how the car market is starting to slow, especially used cars. Used cars are crashing and they're cutting 12% of its workforce. Another mortgage startup, everyone, the bank's going to have huge, huge losses for this. Better is going to cut 4,000 employees. And the big giant Walmart, they're going to be cutting at least 1,700 employees, and I expect this is going to grow. We've all been watching the collapse of Credit Suisse, and they're cutting 2,700 employees. Ford, which is a huge employee in the auto sector, they're going to be cutting 3,000 workers and people. The list of these companies doing these layoffs just go on and on. So what exactly is scaring these companies so much right now for them to tighten their belts as hard as they can and start cutting cost after cost as fast as possible? Well, people, like I've been warning about, there is some very, very worrying signs coming for the economy, and you need to wake up and prepare right now. Now back to this Amazon report. The cuts would be the largest in the company's history and would primarily impact Amazon's devices, organization, retail division, and human resources, according to the report. Because look at Amazon's stock, everyone. It's down 42% year to date, and it's had $1 trillion of its market cap wiped out just this past year, which is going to go down in history as the largest ever. Amazon reported 978,000 employees at the end of 2019, but had 1.6 million full-time and part-time employees as of December 31st, a 102% increase. So yes, this is what happens time and time again, everyone, during the bull cycle and then the bear cycle. During a bull market, companies get very optimistic. They think the spending is going to keep on continuing. We saw what happened in 2020 and 2021. We saw an unprecedented boom in spending because of all the stimulus checks. But of course, that's not going to last forever as the government stops these stimulus programs. Also, people were spending like crazy because they didn't have to pay any of their bills. They didn't have to pay their rent. They didn't have to pay their mortgages. They didn't have to pay their student loans, their credit cards, etc. So people had huge amounts of discretionary spending to just spend. But unfortunately, they didn't prepare for a rainy day like what people just continue to do again and again. A representative from Amazon did not immediately respond to a request for comment. The holiday shopping season is critical for Amazon and usually one where the company has increased its headcount to meet demand. So why do you think they didn't respond for a request to comment? I think there could actually be more layoffs coming and it could actually be even worse than this. And that's right, everyone. This is normally the time of year that companies go on a hiring frenzy. At the end of the year, people are spending a lot for the holidays, people buying a lot of presents for Christmas. But unfortunately, the way this economy is, the way inflation is, it's going to be a very tough Christmas this year for families. But at the end of the day, Christmas is not really about presents or gifts. It's about being there with family, spending time with loved ones, and just letting each other know how much you care about them and just spending time with each other. But Andy Jassy, who took over as CEO in July 2021, has been in cost-cutting mode to preserve cash as the company confronts slowing sales and a gloomy global economy. That's right, everyone. As the Federal Reserve keeps on lifting interest rates, you know what it's going to mean for these corporations? Well, they've taken on record amounts of debt over this past bull market, this 10 to 14 year bull market. Interest rates have been low. They're saying they're never going to go up again. Inflation, well, the CPI report has been low over the past 10 years. So these corporations have been taking on piles and piles of debt, and they thought, the good times would keep going on forever. But now the interest rates are up to 4%, and it's likely they're going to go a bit higher. While these companies' costs on their interest payments have gone up massively. Also, what this means for consumers' interest payments have gone up a lot, and they just don't have the leftover capital to spend anymore, and this is going to be a vicious cycle. The company has already announced plans to freeze hiring for corporate roles in its retail business. In recent months, Amazon shut down its telehealth service, discontinued a quirky video calling projector for kids, closed all but one of its US call centers, axed its roving delivery robot, shuttered underperforming brick and mortar chains, and is closing or cancelling or delaying some new warehouse locations. So that's a massive amount of spending there cut, everyone, and this is going to have flow-on effects through the whole economy. As Amazon cuts its spending, while the companies that were expecting for Amazon to buy their products, well, they're not going to get the revenue anymore, and then they're going to have to do layoffs as well. And remember, one person's spending is another person's income. So as people stop spending, well, other people's incomes are going to have to go, and more layoffs are going to come. And this all started when Amazon had its recent earnings call where its stock crashed 13% in one day immediately after this earning call, and people, it doesn't take a genius to figure out why it crashed. With this, revenue was up, but again, this is just because of inflation, because of prices going up. When you look at this, net income down 9%, diluted earnings per share down 9.6%. But the big losses here, everyone, net profit margin down 20%. This is inflation absolutely killing these big corporations. And operating income down 47%. And just like all other companies are doing right now, net change in cash up 75%. Everyone, what you need to know right now and what you need to do right now is prepare, because your job could be next. We're going to see one of the most painful recessions, and I think a depression coming we've ever seen since the Great Depression. So what I would be doing right now is I'd find a way to start a side hustle, especially something online. It's something you can do very, very easily without any cost at all. Don't go to try to start some brick and mortar business that takes thousands and thousands of dollars to start up. That is very, very risky. If you don't know how to start a side hustle, you don't want to start a side hustle, I'd be looking for another part-time job. That way you can diversify your income. So if one income source goes down, you'll have another. And I'd be hoarding cash as much as I could, cutting costs just like what Amazon is doing, like what all these companies are doing. You have to think of yourself like you're running a business, even your employee. Look at all your expenses and start cutting as much as you can. Because we've had trillions of dollars wiped out from the stock market. But once the housing market really starts to go down, as mortgage rates continue to go higher and higher, that's when we're going to see the real pain begin. And unlike 2008, the Federal Reserve and the government isn't going to be able to be there to save the day because inflation is so high right now. But everyone, what do you think about this? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.